A very good morning to all of you. Welcome to the 27th Mission Smile webinar. I'll just move to the screen. I hope if anyone can just share on the chat box, if you can see my screen. Okay, great. So today is the 27th Mission Smile webinar. I'll just take 1 minute before going into the company and the business and the presentation to make an important announcement. Recently, we have made a lot of changes on our platform of Mission Smile. We call it Mission Smile 2.0. I would request all our members and even non-members to go out and check out. It is also available on Android app. And I know the iOS users have been waiting patiently, but I can now promise you that in the next 2 to 3 months, we'll definitely launch our iOS app as well. So please be patient for 2 more months. And if you have any issues related to Mission Smile, Harshal from our team will help you in all the ways. There is also a WhatsApp group for Mission Smile members. If you are a member and if you are not already added in that group, please drop me a message. I'll connect you to Harshal and we'll do the needful. With that side, thank you so much everyone for joining us on this wonderful presentation or wonderful company, I should rather say Wonderla. And as we have mentioned, it would be an interesting ride. Before starting, since we are a SEBI registered investment advisory firm, the normal disclaimer: I and my company are not invested in this stock as of now, and don't take it as a recommendation. However, I have no shame. In accepting that probably we missed it in the last 2 years, but I think this is a very, very, very good company and business, which we should at least have in our watch list now. And over the course of the presentation, I'll also deep dive onto the business, the financials, how we look at the valuation, and how you can think in the long term about this business. Okay. Before starting, I would request everyone to just please be on mute and switch off your video so that everyone can attend the session in a peaceful and smooth manner. And before beginning the presentation, I would want all of you, because I have not covered that part in my presentation. Post the presentation, I would request all of you to spend some time learning about the founder of the business, Mr. K. Chittilapalli, who has also been the founder of V-Guard, and he has written 3 books. And I was fortunate to read those books in 2018. However, I would again consider myself dumb that I didn't invest in the business, but I read the books. The books are Practical Wisdom, and one special book was The Gift, where he mentions about his life and how he donated his kidney at the age of 60. And if you look at both V-Guard and Wonderla, and if you go to the history and see how these businesses have been built and over the years, how they have shaped up, you will realize that one theme which is common is that they believe in value creation and they have always been very cost conscious. So this is there in their DNA, that they always do things where they can control the cost compared to their competitors in the industry. And that has been their forte. And during the presentation, you will probably appreciate more of these qualities when we deep dive into it. This presentation, we have tried to do something new, and post the presentation, we'll also like to get some feedback from yourself. If you like this or not. And based on that, we'll prepare for the other presentations. So as you can see here, this is the size of the global amusement park industry. And this is where a tiny Indian amusement park, over here you can see this small little dot is the Indian amusement park industry. And that is how you can understand how small it is at the current juncture. So where the global amusement park is about $49 billion. And in case of India, it is only $500 million. I'm sure many of you must be saying that there are reasons for that. And we are not saying that immediately we are going to reach somewhere around 49 billion. Of course, there's a long journey to cover there. But it is always good to look into businesses which form part of a very large industry, but they are very small and doing good, right? That is where Wonderla is. And as we mentioned, there will be 4 rides. The first ride is about the macros. Second ride is about Wonderla. Third, we'll cover the financials. And fourth, we'll cover 3 important business models or mental models, which will help you understand the positive, the kind of business model they are having. And post the presentation, we'll have an extended session with all of you, so that if anyone has any questions, we can discuss, right? So why these are a very clear reasons why Indian amusement parks have a long runway. And I'm not going to go deep into that because all of us already understand, right? Now, what is Wonderla? Wonderla basically has 3 operational parks in Kochi, Bangalore, and Hyderabad. They started with Kochi, and then in 2005, they also made one in Bangalore. And then in 2016, they started in Hyderabad. And one hotel or resort, whatever you call it, is there in Bangalore, which is closer to the park they have. And there are 2 parks which are soon going to be operational, one in Odisha and the other one is in Chennai. In fact, if you have been following Wonderla for a long time, you would have noticed that in 2018, they bought a land parcel for about 100 crores in Chennai. But then they had some issues with the government where government levied an additional tax. And that is why they couldn't start building their park on that. But in the month of May only, there has been a resolution where Wonderla is going to get 10 years of tax holiday there. And that is how they have now begun the operation in terms of building up the park over there, right? Now, before coming into the numbers, I just wanted to say that I think I missed something. I'll just go back. Yeah, I missed this slide. Now, before going into Wonderla, you can see this stat. I just listed down the top 10 amusement parks in the world based on their footfalls. And you can see most of them are in United States. And the average footfall in all these parks have been between 10 to 20 millions. Okay. All of these parks are in USA. And the park in India, as in the top 3 park in terms of footfalls, are with Wonderla only. And if you just check the footfall, which we'll again cover in detail in the subsequent slide, on an average, they have 1 million footfalls only, right? Now look at the population of US and look at the population of India. Of course, there have been issues like the spending power or the discretionary consumption power in US and India are not same. But do you think it is going to be the same in case of India for the next 10 years or 20 years? So that is the kind of runway we have. The second question which might come in people's mind, and I was discussing it with some of my friends, people say that if Wonderla's park, if we go from 1 crore to 1 million to 2 million, it will be very difficult for people to find it convenient or entertaining because there would be lack of space. So if you go by what management says, they have space for, on an average, 6,000 people per day. And if you do the math, it comes to about 2.2 millions, right? So even if Wonderla's park footfall go from 1 million to 2 million, they still have the space to accommodate them. Of course, there would be some problem in terms of too much of people having coming in one place. So if you look at their park, I'll cover that also in subsequent slide. All their park have huge land unutilized around the park, which they can slowly utilize when they see this kind of footfalls happening, right? So that is the kind of scope this business has, and they've already paid for the land. They already have the facility. They don't have to do any capex. They just have to do, as in, they don't have to do any large capex. They just have to make more rides and make it more available for their people or public who attend those parks, right? This I've already covered. So now let's come to the details of each. So we have already done the zoom out thing where we looked at the macro. Now we'll zoom in as to what they are doing and the best. So many people make a mistake of just going to the screener and looking at the, I think one of the participants before the start of the presentation also mentioned that the sales growth is only 10% over the last 5 years. He has a valid point, but when you look at a company like this, you have to go into the nitty-gritties and look at the park level. And why I want you to look at the park level is because only when you understand the park level dynamics in a business like this, then only you will be able to take a long-term call if you want to invest or not. And this is a business where the initial capex is very high. Okay, but when the park mature, you will be surprised to know all their 3 parks now have close to 100% incremental ROE. That ROE is not reflected in the accounting ROE which you are seeing on the screener or even in the annual reports, because in the annual reports they have all 3 bunched up, and there is also the investment they have made in the land in Chennai. They are also now going to start new park in Odisha. So there'll always be new investment for new park, wherein the ROE will be subdued in the early 3-4 years. And then there will be parks like Kochi, Bengaluru and Hyderabad, where the ROE will be very high. And that is what you should understand when you try to invest, or maybe if you want to deep dive into a business like this. So now look at this. 2000, they started Kochi. In 2005, they started Bengaluru. 2016, Hyderabad. And now probably by 2025, Odisha will be up and running. Okay. And if you look at the pattern over here, see, if you can see here, the land available in Kochi was 93 crores. And the initial capex was only 65 back in 2000. When they started in Bengaluru, see, the land size is going down, but the cost, initial capex is going high. Similarly, in Hyderabad, land got further decreased from 82 acre to 50 acre. And look at the capex they have made. That is 250. So one thing which is very clear is the cost of land is very, very, very high. And they don't need a 1, 2, 3, 4 acre. They need at least 20, 25 acre of developed land where they can run the rides and all, right? Because that is how you will give the experience to your customers, right? Now, look at the footfalls today. These footfalls are based on their current numbers, right? Now, this is the average revenue per user in FY23. This is the number: 1100 in Kochi, 1352 in Bengaluru, Hyderabad, it is 1252. The surprising fact about, or the thing which we should notice is that in Kochi, they took 15 years to reach this kind of ARPU. In Bengaluru, they only needed in Kochi, they took 20 years. In Bengaluru, only 15 years. And in Hyderabad, in less than 5 years, or maybe 7 years, they've reached this kind of ARPU. So the ARPU is increasing at a higher rate in newer parks, if you can see that, right? Because of inflation, people's ability to pay more is also rising. And one important part, which is not highlighted here, which you should understand when you, so I have not been to the parks, but I have spoken to a few people who have been to Wonderla Park and all. The best part about Wonderla is the untapped pricing power. And what do I mean by untapped pricing power? You go to any mall, you park your car, you will have to pay a parking fee. And you know, for all the malls, the parking fee itself generates a lot of revenue. But in Wonderla, they don't charge any parking fee. They don't charge for all the food and beverages item. You can get them at MRP. You go to any cinema hall and you know their business, the main business is by overcharging the food and beverages item. And if you now relate it to what Charlie Munger taught us about the untapped pricing power in a business, where a business knowingly and willingly is keeping its price low so that consumers or customers enjoy, and they will always come back to them because they are giving that kind of value to their consumers. So if, for example, since I am in Bangalore, I know about Bangalore. In Bangalore, if you buy a ticket of 1,200 or 1,300, you can go to all the rides which are there. You don't have to pay any extra money. And the fun fact is, I know a few of my friends who visited these parks when there was low turnout, or where on days when it is not peak. Very few people have attended those things, as in attended the park. Those days, they are able to enjoy a ride 3 times, 4 times, 5 times. And Wonderla never charges anything. How many times you enjoy the ride, you are not going to pay anything extra. So that is the kind of value proposition they give to their customers who come to their parks, right? Now, the best part about their capex is all the heavy lifting is done at the start. Once the park starts maturing, they produce insane amount of revenue, and there is very little maintenance capex they have to do. So the ROE which they generate after, say, 10 years or 15 years is close to 100%. Yes, I'm not making this up. Close to 100% is their ROE in case of parks like Kochi and even in Bangalore now, because the heavy lifting has been done at the start, and later on, whatever little capex or maintenance capex they have to do, the kind of insane revenue and profits they make, that is more than sufficient for them. And that in a way help them to further invest in new parks, right? And that is why you will see when you go to the screener and see there is no loan or debt on the books, because the internal accrual is so high, and that is good enough for them, right? One thing which you'll notice, that the thing which I talked about at the start, that the land which was earlier going down and the investment was going up, the best part is this thing is reversing from the Odisha part. You can see from Hyderabad to Odisha, the land available is the same, and the initial capex have come down drastically from 250 crore to 125 crore. And that, I believe, is one of the best thing which is happening for the company in terms of their quality of their business model. Earlier, the kind of investment they had to do in their park is now going to be further reduced, because nowadays they are in talks with several government, not just in Odisha. Odisha, they have already got the order, and the Odisha government is giving them lease, long-term lease. So their cost of land is going down drastically, right? Similar talks, and they are not just waiting for Odisha thing to pick up. They are having similar talks with government of Goa, Punjab, Gujarat. I'm forgetting one of the states, I guess. So that is what they are trying to do now. And from an asset heavy, they are slowly transitioning to an asset light business as well, right? And you can look at the ARPU of ticket and non-ticket. Just look at right now, it is 269 in case of Kochi, 346 in case of Bengaluru, and 350 in case of Hyderabad. And in the subsequent slide, we'll also actually compare the ticket revenue and non-ticket revenue. If you look at parks outside India, anywhere, you will find that 33% of the total revenue is, 1/3 of the total revenue is from ticket, 1/3 is from merchandise, and 1/3 is from the food and beverages. But in case of Wonderla or any parks in India, even today, ticket forms a huge part of the revenue. This, I again believe, is going to slowly change. And if you'll see, and we'll cover that in the subsequent slide, that it has already started changing, right? Look at the developed land and unutilized land. They still have a lot of unutilized land, which they can tap into once the footfall rises, just to give better experience to their customers, right? So this is the dynamics. And the one good part about the company is, if you talk to their IR, investor relations, they will share with you all the details of the parks. And that is incredibly important to understand the dynamics. Just look at the Kochi park. In 2001, the footfall was only 5 lakhs. And look at the revenue then, 9 crore only. Today, fast forward 20 years from there, it is 130 crore. Footfall has doubled. ARPU from 192 has jumped to 1122. 10x, sorry, not 10x, 5x. Okay, that is the kind of jump. So if you understand from an owner's perspective, look, put yourself in the shoes of the promoters of Wonderla. They know this from beginning, that their revenues are non-linear, but their costs are always linear. That is the benefit. Only the upfront capex is there, but after that, the costs are always linear, but the revenues are non-linear, because the footfall will also increase and ARPU will also increase, right? Same is the case with Bengaluru, Hyderabad. Bengaluru was formed in 2005, Hyderabad in 2016, and just look at how they have ramped up, both in terms of footfalls and also in terms of ARPU, right? So clear patterns which we can now summarize is that as parks mature, footfalls increase, revenue growth is non-linear, footfalls in newer parks take lesser time to reach 1 million mark, ARPU increases over time, and that too non-linearly, and high profitability and ROE of all parks as they mature. So आपको Google screener में या इनके annual reports में in 2000, if you go to 2018, 19, 17, those time the revenue, the ROE was suppressed. And in fact, one important aspect of ROE, why it is suppressed in, if you go back and check, they even mentioned that in the con calls also recently. But if you go back and check their annual reports, in 2000, I think FY17, they had to, as per the Ind AS new law, they had to revalue their assets in the tune of 300 or 350 crores. So when you revalue your asset, your fixed asset will go up. And similarly, to balance that fixed asset, you also have to, as in just an accounting entry, when your fixed asset go up, naturally your net worth will also go up. And when you calculate ROE, what is ROE? It is PAT divided by net worth. When you are increasing your net worth, of course, the ROE will decrease. But try to understand why this increase happened. Because you have just revalued the land. There has nothing has changed. If those land would be recorded at the cost price, even in today's FY23, the ROE would somewhere be in north of 30% or maybe even 40%. So that is also one thing which we should keep in mind. Why the ROE over the last few years have not been that great, right? And now you are seeing an ROE in the range of 15 to 20% or maybe even 25%, because in the recent years, they have not done any big capex, and all these 3 parks have matured, right? This is resort business. So generally, we are not fan of resort or maybe hotel business because hotel business are highly cyclical. But in case of Wonderla, it provides a good opportunity for them to have more footfalls in their Bengaluru park. However, if you look at the revenues, in terms of the total revenue, right now, the resort business, I don't think it is moving the needle much. The only good thing about this resort business is that they lead to more footfalls in case of Bengaluru park, right? Even here also, you can see how revenues have ramped up in the recent 2-3 years. Okay, this is the resort occupancy. They started somewhere in 2011 or 12, I guess. And consistently, the occupancy has been rising. And that is why the revenue also have increased during that period. So now we'll deep dive into the financials, right? Now this is very, very, very important. So you can see over here what I've done from 2009 till 2023, how their revenues have moved. And I've broken down what is the total revenue, what is the ticket revenue, what is the non-ticket revenue, what is the amusement as in, and what is the revenue from the resort. So as you can see, resort revenue is pretty minuscule compared to the total revenue, right? But the interesting part about ticket revenue and non-ticket revenue is, you can see over here, non-ticket revenue at the start, 2009, was about 14%. It has steadily increased over time to now 25%, right? So the problem with most investors are that we look at what has happened in the last 2-3 years, 4 years. But when we segregate data in this form, where we see what was in 2009, 12, 15, 17, and that is where the numbers really speak to us, right? So agar aap last 3-4 saal ka dekh rahe honge, to it looks like in the same range, 22 to 25%, right? But look how it has traveled over the last few years, last 7, 8, 10, or maybe 15 years, right? And it is still having a lot of scope to further increase. And the more the non-ticket revenue increases, the better it is for the company, because उसमें कोई capex नहीं, कोई margin में भी improvement आएगा, right? Because they don't have to do anything. They just have to serve those food and beverages, basically, right? So you can see how share of non-ticket revenue has increased over time, and how operating leverage and margin have increased, right? And this trend is further going to continue, as you can see if you go and check their con calls, specifically in the FY23 con calls, all the con calls, the management remains very focused on working on how to provide more value to the customers and increase their non-ticket revenue, right? Now look at the financials. So over here, from 2017 to 20, it was almost at the same level, because they were marred with some problem or the other during that period. There was some GST issue. Then they invested in the land of, they invested in a land in Chennai. They couldn't start the project. They invested a lot of amount in terms of starting their Hyderabad project. It took some time to take off. And then the worst of all, the COVID hit during the FY20 end, right? And you can see how the revenue collapsed in the next year, because probably travel and travel related business are the worst hit sector in terms of a pandemic like COVID, right? But look at how the revenues have grown. And many people think that it had happened overnight and it is aided by pandemic. I would say it is not just that. So there has been some sort of a revenge travel or something like that, which is popular nowadays. But predominantly, a large part of it is, according to me, is something which was happening over the years. More and more people started visiting these parks, and more people are ready to pay more for visiting this park, because the kind of value proposition they are getting at, say, 1,000 rupees or 1,200 bucks is very, very, very satisfying for them, right? And in the same period, when sales have gone up by say about 4x, similarly profit has gone up. If you look at the net profit, it was 30 crores and that has gone up to 150 crores, right? Okay, these are some of the numbers. Now look at the balance sheet. As I mentioned that time, you can see over here, reserves were 346 crores in March 16 and it went up to 684. That was predominantly because of the revaluation of the fixed asset, which was again an accounting entry which was done as per the Ind AS. Nothing changed in the business. They just complied with the accounting regulation, and that led to suppression of the ROE. So up 2017, 18, 19, 20 में कभी भी देख रहे होते तो इनके ROE की बैंड बजी हुई थी. And why it was that? It was nothing to do with the business. It was more to do with an accounting entry, right? And that is where going deep into the business, understanding the unit level economics and understanding from the perspective of Wonderla, understanding the park level dynamics is far more important than just looking at the consolidated numbers like this, right? So look at the cash flows. They were only getting, say, 50 to 70 or maximum 90 crores of operating cash flows pre-COVID. And look at how suddenly that cash flow has gone up. The only reason for that cash flow to go up is higher footfalls, higher ARPU, more people coming to the park, and they are spending more on not just their tickets, but also on food and beverages, right? And mind you, again, food and beverage, as I said at the beginning, I'll again repeat here, it has a huge, they have a huge untapped pricing power potential in that business, which they are still not using, right? Just imagine if, say, 5 years down the line or sometime down the line, they start to increase these food and beverages prices. However, that would not be good for customers, because customers find this kind of value proposition because they like that the food and the beverages are really cheap and sold at MRP over here, right? And you can see, you might be thinking they would have done a lot of capex here, but in FY23 there has been hardly any capex. It is more into the investment in mutual fund and all. So if you go and check the details, there hasn't been any capex in the last 2, 3 years, 4 years. The last big capex was towards Hyderabad, and once they bought the land in Chennai. Those were the times when they did a large capex. So in the last 2, 3 years, they have not done big capex, and that is also one of the reasons why the profitability is showing up so much in this year, right? So in FY25 or maybe in FY24 also, you might find a little dip in the cash flow if they do, if both the capex start doing well. However, today, if you look at the main numbers, they have around 250 crores of cash in their books as on March FY23, and they are generating 200 crore of cash flow now every year. From FY24 onwards also, they will easily generate 200 crore from the existing parks which are already matured, right? And their requirement for their Odisha project and the project of Chennai put together will not be more than 300 crores. So they are in a much better position today in terms of doing new capex. So as of now, the management has conveyed in their con calls as well that they are not looking for any kind of debt, because they are pretty confident that as of now, the internal accruals are good enough to take care of these projects, right? They may have to take some debt, but as of now, the book is completely debt free. Now look at the margins. So gross margin is 90% in this business. Operating margin also today, it is standing somewhere around 40%. And even the net profit margin is about 35%, right? That is, this kind of margin will happen when your parks will mature. If they, in the next 2-3 years, they say, hypothetically speaking, if they start working on say three parks together, or maybe in 4 parks together, then again you will see a dip in their in the accounting books. You will find dip in the margin. But you should understand that this is the nature of the business. They have to consistently invest this money in creating new parks. Then only they can make a sustainable business out of it, right? So now comes the last leg, which is of mental model. So we are going to cover 3 mental models, because I believe when we look at businesses from mental models perspective, our understanding of business becomes more and more clear in our mind. And we look at it in a far more broader perspective than just looking at the numbers, or just looking at the growth, or just looking at what is the park doing, or what kind of parks, right? So to move beyond the numbers and to further deep dive into what kind of business a Wonderla holiday is, let's look at these 3 mental models. Number 1 mental model is lightning in the bottle. Again, this is not our mental model. A very good blog post was written by Mr. Ian Castle, who is a famous investor in the microcap space. Many investors all around the world know about him, and you can just check this blog by the name Lightning in the Bottle. And this mental model basically talks about, in this blog, Ian Castle talks about 3 things which actually leads to a business which could actually behave like a lightning in a bottle, which is waiting to come out. One is a small market cap company, which is not very large, like say 50,000 crore or 1 lakh crore. Company which has a lot of high organic growth built into it and operating leverage. And the third is some sort of scarcity, right? So in case of Wonderla, we found that all these 3 are perfectly fitting. It has a small market cap of 3,000 crore right now. Look at the organic growth which is possible there. Growth in footfalls, we have already seen in their matured parks, how the footfall has gone to 1 million already. Increase in the ticket price we have seen. Unutilized lands in all parks. That is again a source of operating leverage and organic growth, because they are not using those land yet. Once they see more footfalls, they can easily expand. They don't have to do any large capex to accommodate this new or this large footfall, whichever which will happen sometimes maybe in 3 to 5 years from now, right? Scope of adding newer parks. Again, they just have 3 parks now, and India is having a dearth of these kind of amusement parks, right? There is one in the name of Nikko Park in Kolkata, but if you compare them with what Wonderla is doing, it's completely different. Then there is one Imagica, which after the change in the management, some sort of recovery is happening in that business. But if you compare the business model of Imagica and Wonderla, you will see the difference, that Wonderla is far more asset light compared to Imagica, and the upfront capex in Wonderla is far lesser compared to what it's there in Imagica. In fact, interestingly, during the COVID period, Wonderla had the option to even buy out Imagica, but they refused to do that. And I personally believe that was a right decision to do, because the way Imagica parks are run and the way Wonderla parks are run are completely different. And it is a good sign of a management which is sticking to what it is known for and what is its moat, basically. The moat of Wonderla is using more and more their own rides and importing lesser and lesser rides, which leads to less cost of capex when you start the project, right? So these are the 4-5 organic growth and operating leverage lever in case of Wonderla. And scarcity. There are very few listed players. There's one Nico Park, which is a tiny little company. Nobody knows about it. Then Imagica, we know what kind of problem they have faced in the past in terms of high leverage. And they have recently had the management change. And the second source of scarcity is low float in the market. Promoter holds 70% of the shares, right? So I think lightning in the bottle is a very good mental model for us to understand Wonderla in that sense. A small market cap, high organic growth and operating leverage built into the business model. And then there is some sort of a scarcity, right? Mental model 2 is about change. So we all know about that favorite quote of Jeff Bezos, where he talks about why it is important to bet on things which are not going to change. But if you look at the market, stock market has a habit of rewarding businesses or companies which are undergoing a change. So 2-3 changes which we all know about is a management change, which is a very hot topic, and most of our community members, we are always talking about this company had a management change, so we should look at it and it could get some this thing. It could be re-rated, right? So management change is one, new product is one, new geographies is one. So market re-rates a stock pretty quickly based on these above 3 changes. However, I personally feel a 4th change, which is far more important than these 3 changes, is the change in business model. And this kind of change is far more enduring and long-term. It happens over a long period of time. So an investor can benefit from this change for a long time. A management change or a new product or a new geography cannot benefit an investor for a long time. उसके लिए जो re-rating होना होता है बहुत short term में 6 months, 1 year or max 2 to 3 years में वो हो जाता है re-rating. But when there is a change in business model, right now they are only talking about Odisha, which is going through the asset light model. They are already in terms of they are already in talking terms in the case of Goa, Gujarat, Punjab and others. And look at the situation in India. Most of the states now realize they need to grow the tourism in their business, in their state. And to grow the tourism, a very good thing to do is to have good quality amusement park. And there is no, in terms of quality, there is no one in any distance with Wonderla. That is where Wonderla has this advantage. So the change in the business model of Wonderla is asset light, low capex strategy for all these new parks. Now, add to this the luck factor where the Chennai problem, which was happening, which was there for last 4-5 years, recently got solved. And that is where you see now how the stock has re-rated in the last 1 year or so, right? So that was about mental model 2, that is change. And this is the mental model 3, which is of game selection, right? So this mental model has been, I'm forgetting the name of the famous investor who basically who came up with this mental model, where he says that there are 3 stages. Okay, over here it is here. So Mr. Yen Liu, he's a very famous investor, and you can check about him also on the internet if you don't know. I'm sure many of the members are already aware of this person. He talks about businesses in a very unique concept, where he says that in game selection, we focus on the replication phase of a business cycle. So there are 3 stages. One is the proof of concept stage. What is a proof of concept stage? Proof of concept stage is a stage where the company is actually finding its feet. They are trying to cement on the business model what they want to do. They will make a product or service or do something, and then slowly it will mature and they'll see the fruits of it. That is the proof of concept. Once the company is sure about what they are doing and it is working well, then they enter the replication stage. So, and not many businesses have that liberty to have a long, prolonged period of replication. Most of the businesses are businesses where the proof of concept stage and maturation stage is not too far away. But then there are few businesses like Wonderla, where after the first phase, which is the proof of concept, you have a long enough phase where replication can happen, right? So in case of Wonderla, that is where we believe right now from proof of concept stage, they are entering the stage of replication. So, and given the following metrics of number of footfalls, ARPU, share of non-ticket revenue, total number of sizable amusement parks in India, it is very clear to all of us. There is no debate on that, that the maturation stage is still far, far, far away, right? Now that we have covered all the mental models, we have covered, we talked about the 3 sections or 3 rides. Number 1 was on macro. Then we talked about the business of Wonderla. Then we covered the financials, and then we covered the mental models. Now, last part in the piece of the puzzle is the valuation. And I have done valuation in a very, very, very simplistic manner. We may debate on it. You may not agree with what we have done over here, and that is fine. Everybody's valuation style of valuing a business is different. But this is what simply I could see. So you can see today the number of parks are 3, and average footfall is 1 million, and ARPU over here is 1250. 2 parks are already in terms of getting operational in the next 2 to 3 years. I'm just making a very simple assumption. 10 years from now, they will add just 2 more parks. So 5 तो already है, 3 है और 2 और हो जाएंगे. And मैं बोल रहा हूँ कि 2 और add होंगे. So only 7 parks will be in the next 10 years. Right now, their ARPU is 1250. Next 10 years में इसको double तो होंगे. Inflation adjust करोगे. Conservatively thinking, it will at least double from here. If you are happy paying 1250 for yourself to go to a Wonderla today, don't you think in 10 years from now, you'll be happily paying 2,500, right? Second, I'm just assuming that 1 million footfall today will go up to 2 million. However, I personally believe there is a scope for going even beyond 2 million. But from a valuation perspective, I am taking a very conservative estimate, which is 2 million. Remember, today in US, all the top parks, they are already having 10 to 20 million footfalls. Each park is having 10 to 20 million footfalls, right? Look at where India is going to be in the next 10 to 20 years, right? So I don't think 2 million is a number which is hard to achieve. In fact, I would say they have a high chance of overshooting that. The next point which people can say that whether they'll be whether they'll be able to accommodate 2 million people in their parks, I believe yes, because as I've said the numbers already, 6,000 is what the management say per day they can accommodate. So 6,000, you can do the work out the math, it's roughly around 2 million yearly. Now, whether 2 million will be easy to accommodate at the current juncture, I would say probably no. So they will have to probably eat into the unutilized land which they have alongside their parks. But it is definitely doable according to me. So I've just taken at the matured level today, when all the 3 parks are matured, what is their EBITDA percent today is 40%, their PAT percentage is 35%. I've just taken a very simplistic number crunching I have done, which is if they will be having 7 parks, 2 million footfall per park. Total footfall will be 14 million. ARPU is 2,500. Total revenue 10 years from now will be around 3,500. EBITDA percent same, PAT percentage same. If you take exit multiple of say 15 to 20, this is how the XIRR comes to. At 15x, it becomes a 19% CAGR. At 20x, it becomes a 22% CAGR. Now, this 15 and 20 ka multiple is a debatable thing. We'll cover the risk part of the business also in the subsequent slide. There are some inherent risk in the business. Depending upon investor to investor, some investors might not be willing to pay a 15p and may look for a 10p. But from our perspective, SmartSync Services, we have been saying that we have this stock SIP portfolio of 20 stock where we buy every month in the 20 stock portfolio. As of now, our portfolio XIRR is about 21%. So we incrementally, whenever we look at a new business, that new business should have a potential XIRR of upward of 25% to enter into our portfolio. And that is why sadly we cannot buy it today, even though we like the business a lot. And again, I have no shame in admitting that I missed the business last year or even in COVID. So any time between 2020 to 2022 was a good time to accumulate the shares. Even 2023, FY21, at the start of FY23 also you could have bought. But at this juncture, we cannot buy because this is our philosophy is that any new stock which has to enter into our SIP portfolio must have a higher bar of XIRR, upward of potential XIRR of upward of 25%, because already our existing portfolio stocks put together is giving us a XIRR of 21%. So that is probably the reason we are not buying the stock now. But if hypothetically speaking, the stock corrects say 30% from now, this XIRR from 22% jumps up to about 26-27%. Then it becomes extremely attractive to us, and we may buy it in our portfolio also. So that is how we look at Wonderla business from our perspective. Now, I've covered all the portion. So these are the investment rationale, macro tailwinds, increasing per capita and disposable income in India, scope of scalability, entry barriers. It's not easy to build a park like this. Any new competitor cannot come and just build a park out of thin air, because it requires a lot of upfront capex, and also it also requires a lot of servicing to the customer. They should also be happy being in that kind of a park, right? Low cost model, as I already told about, low threat from foreign competitors. Again, I was talking to someone and I got to know that if you go to somewhere like I'm forgetting the name of the park, which is very famous in Singapore, is also there. Universal Studio. Yes, Universal Studio. If you go there, there are a few rides which will cost one particular ride will cost you upward of 100 crores. That is how expensive these parks are. So foreign competitors coming here, putting up that park here, their payoff period. So like Wonderla has in the past used to have around 8 years of payoff period. Now with this new asset light model, that 8 years will come down to 5 to 6 years. But in case of foreign competitors coming here and setting up their park with their own imported rides and all, the payoff will easily increase more than 15 to 20 years, which makes it very difficult for those guys to put their parks over here, right? High operating leverage, I've already talked about, transitioning from asset heavy to asset light. Value for money for customers. Again, I'll again repeat that because this is very important. You're not charging exorbitant price for food and beverages. There is no parking fees. These are little things which provide joy to the customers. And that is what lead customers to come back. In fact, I would like to share an incident. One of my cousin's friend, he lives in Kolkata. He takes a flight, Kolkata flight to Bangalore, spend one day in Wonderla, takes a flight back in the evening and go back to Kolkata. Those kind of people are also there who wants to enjoy Wonderla Park, right? Ethical promoters, we have already talked about the the founder, and right now, his son, Mr. Arun, is looking after the company. He's the MD, and you can see what are the new initiatives. Again, if you look at the recent con calls and presentation, they are coming up with new initiatives where how they can increase their non-ticket revenues. And as I've also discussed about the valuation, it is not overly expensive, even though it is not cheap. Now, before ending the presentation, I've talked a lot about the positives, why we like Wonderla, but there are some negatives also. You can see them written on your screen. But one particular thing which I want to highlight on, which I learned from one of my friend only, who mentioned about this asymmetric risk. So Wonderla has perishable inventory. And what do we mean by perishable inventory? Some of you already know about it, be it airline, be it hotel, or be it parks like Wonderla. They cannot sell today's ticket tomorrow, right? If a park is vacant today, that revenue is lost forever, right? And look at it in this way. If it is raining today in Bangalore and there will be low turnout today, tomorrow, if the sun rises, and if it is completely sunny weather the whole day, you're not being able to make up for the lost revenue today, right? So this is the asymmetric risk they have. The pandemic, because of pandemic, the sales were lost. Those sales can never be made up. क्योंकि एक limit है कितना लोग park में जाएंगे, right? So you cannot. So these are asymmetric risks related to it. Something like a pandemic or any kind of thing which stops you from going out of your house will have a deep impact on their business. Accident and reputational risk is again another thing. If something like that happens, that also brings in a lot of disreputation to them. And then government pricing and tax risk, which we have already covered. That is one risk there. Another big risk or trend which we are seeing is that more and more people, especially youngster people at the age of 10, 11, 12, or maybe 18, 19, are spending more and more time on digital gadgets. However, on this last point of the world moving on AI and VR, I have a different view. I think I'll leave you with this closing thought, which basically believes in that why I believe that even with AI and VR, something like a Wonderla is not going to have any problem, because inherently more and more people and family together, they understand that we need to spend time together. We need to go out to really enjoy. And with more and more digital usage, we crave for these holidays even more. So I don't think that is going to change. I don't think our pattern of travel is going to change. We may travel to different places. You may say that there will be many people who will, if the discretionary consumption in India goes up, if we have more disposable income, there will be a section of the society which will probably not mind going to, say, Singapore or US to enjoy amusement parks there. But still, a majority of Indian population will still want to stay here, will be able to afford this kind of park because it is affordable for them. It is something which they can, which is closer to their city. And right now there are only 3 cities where this park is there. Assume 5 to 10 years down the line, if they open 3, 4 more parks, so there, as and when they open more and more parks, their geographical concentration risk is getting reduced further and further, right? So for example, Bangalore is a place where there is always rains happening. So if they open a park at, say, Bhubaneswar, where their rain is not happening all around the year, so they're somehow making up for what is happening in Bangalore, right? So with this, I come to the end of the presentation. I hope you enjoyed it, and we are open to take up question. I'll just stop sharing my screen so that, just a second. I just stop sharing so that I can. Okay. I'll just check out the chat now. Yes. So any question, anyone? You can either raise your hand or ask it on the chat box. Okay, I see Kirti raising his hand. So yeah, Kirti, I have unmuted you. You can ask your question.
Sir, this Nico Park, have you seen?
Yeah, I've seen.
Acha. It's in Kolkata, so but it's run by, I think, West Bengal government agency, right?
I'm not sure. Maybe I'm not sure about the ownership.
Okay. But that it was owned by Nico Group, but they defaulted on their loans. So
Maybe.
government took over. But the valuations are very, very cheap over there also. Do have a look at that sometime.
Yeah, but the problem with Nico Park is that they have only one park.
Yeah. True.
And so what is the kind of scale you can assume in a business like that?
Correct.
Right?
Correct. But incrementally, they also have very, very low rates. Like for entry, they are only 250 rupees around. So
Okay.
they're also the.
So in Nico Park, Kirti, that's a good point you raised. So I have spent a lot of time in Kolkata, so I understand about Nico Park. I've been to those parks. So, so even I don't know what is the entry fee today, but after the entry fee, you have to pay for. There are a few fee rights, and then therefore there are many rights for which you have to pay separately.
Correct.
And again, in case of food and beverages, what you get at outside, it is the food and
Rates are
beverages. It's very higher. So premium charging is there. That is the main point over here in case of Wonderla.
And they also have a division, I believe, of manufacturing these rides.
This is Wonderla has. I don't know about Nico Park.
Yeah. Even they also have.
Okay.
But I haven't delved deeper into it. So I was just looking at it. Upar se. So we'll have, if you get a chance, do. Since you are from Calcutta, do get some information of that if possible.
Definitely. I'll let you know. And I'll share it in the group also later on. And actually, it's a good time to even look at Nico Park. I have not looked at it.
I used to look at it since 25 levels, and it's moved to 125. So it must be doing something.
Yeah.
Only 4 years ago, it was 25 rupees.
Right. So when a sector does well, so like travel and travel related was the most hard hit sector during the COVID. And if you look at post-COVID, they have done really well. So all these travel related companies have done well. Similarly, Wonderla is doing well. So when that kind of things happen, the delta is highest in case of the beaten down names which have not done well for a long time. Those will find the highest delta. But will they make up for long-term investment? I'll reserve my thoughts over there.
Okay. And the rates, do you know the rates, approximate rates? If you can find out.
I remember last time when I visited, it was 500 rupees, but I don't know right now what.
No. The area rates, land rates.
In Kolkata?
Yeah, in Salt Lake, I think. I believe it's in Salt.
Yeah, it's in Salt Lake. So I think the rate has increased definitely many times when they built that resort. So I don't think they have extra land space which Wonderla has in their resorts.
Okay. Thanks a lot.
Thank you, Kirti. Yes, Aditya, I've unmuted you. Aditya, you can go ahead.
Yeah, sir. Are you able to hear me, sir?
Yes, go ahead.
So, sir, if one needs to enter Wonderla, so what is because it's at all-time high. So what do you suggest, if one needs to enter Wonderla?
So I don't believe in this philosophy of all-time high hai to nahi lena chahiye. Good businesses may continue to hit all-time high for a long period of time. So I personally believe we should not have that kind of a framework in mind at all-time high. So I'll give you many examples. Look at Bajaj Finance, look at Eicher Motors, look at PI Industries, look at so many pipe manufacturing companies in the last 10 years. They kept on hitting new highs every year. So if you just wait for correction, that is not the right way. I would say you should do the valuation in terms of what is your time horizon. If you are looking for, say, 3 to 5 years of time horizon, you have to look at where do you see the revenues, where do you see the profits, where do you see the cash flows, and what is the valuation today? And based on that, do you see there is any margin of safety or not? And your margin of safety and my margin of safety may be different. So for example, I said that I am putting a 15 to 20 ka PE ka band. But I have spoken to a few investors, friend of mine. They say that they will probably put 10 to 15 ka multiple band because they see that they see the inherent risk is which is there in the business model, which is asymmetric risk, where something like pandemic happens or kuch bhi koi us tarah ka panga hoga, the kind of lost revenue cannot be made up in the subsequent years. Right? So it is up to you what kind of multiple you want to pay, and there is no right or wrong. What I am saying is right, that agar main bol raha hu to 15 ka to 15 ka hi hona chahiye, aisa kuch nahi hai, right? So it depends from person to person. That is how we look at businesses. But we have a framework where, since our portfolio, stock SIP portfolio, is generating about 20 to 21% XIRR, incremental addition to the portfolio should only be then when we feel very strongly that potential XIRR from today would be upward of 25%. So in case of Wonderla, we don't see that happening now. Say the stock crashes, say 30% sometime in the future, then we may get that kind of CAGR. But this is one business where we can think long term. There are lesser competitive forces. There is some moat which is going to be long term if they continue doing what they are doing. So that is how we look at the business.
Yes, sir. And I see mutual fund holdings as well. Tata Small Cap, and they have also invested into Wonderla.
Yeah, so there have been mutual fund investing pre-COVID also. I know few investors who had held on to the business pre-COVID. They even bought during the COVID time. So those were really smart investors. We should listen to them more, actually.
Yeah, absolutely right.
Right.
Thanks.
So I have no shame in admitting that I probably missed it in the last 2-3 years, even though we at SmartSync Services have been very vocal about travel and travel related space, but we missed out on Wonderla. But that's fine. That is part and parcel of investing.
Yeah. Thanks.
Thanks, Aditya. Anyone else who wants to ask any question? Yeah, I see Vinod raising his hand. Yeah, Vinod, I've unmuted you. You may ask your question.
Yeah, first of all, this is my first webinar, so that was very interesting, and I like it the way you explained. So I would like to thank you and express my gratitude to for this. So thanks very much. As one thing you said that you are not adding in your SIP stock because your criteria is like it should give a 25% and above CAGR, right? And if this was on a downside, right? Let's say it was not on a all-time high and it would have been on a lower side, then it would make sense for us to invest at that time, right? So what I'm trying to say is that I don't know whether you always take the analysis of any company whenever it comes at an all-time high, or whether we will have an analysis generally should start when the company makes the all-time low, because that is the right time to analyze the company, understand the company, and probably in 3 to 6 months we will understand the company, and probably when the momentum starts from the lower side, we should get an entry. So
right.
That is something I just want to first ask, that whether you do the analysis always on an all-time high company, or it's a mix of both. Generally, it should be on a lower side. Whenever the industry is on a downward, we try to understand the company and business and industry. And if it makes sense for us, then we can potentially get the maximum out of our analysis, right? So that is something suggestion, as well as I want to ask whether you cover both type of price related analysis.
Yeah. So thank you so much, Vinodji, for asking this question. And I think it's a very, very, very relevant question. And you have asked two-part question. The one part is related to the valuation of the company, whether we should wait for stock to correct and all. I'll cover that also. And the second part is related to how we analyze businesses at Mission Smile or at Smart Sync Services. So first of all, thank you for being our Mission Smile member. And since you have joined in recently, I would say just go and check so this is the 27th Mission Smile webinar. So before this, we have covered 26 webinars. That means 26 months. And you will see our effort is always to find businesses which are long-term, which show some long-term good quality. Sometimes we manage to get it at a time when their valuation is low. Sometimes so if you look at our past 5-6 webinar, I'll just talk about some names. We covered Piramal Enterprise, Piramal Pharma. We covered Indian Energy Exchange. We covered Cartrade Tech. All these were all during the valuation when we believe the valuation was very low. Right now, whether they will do or not, I don't know. We covered Apcotex way back in 2021. We covered travel industries in May 2021 when nobody was looking at it. Our effort is always that, but that doesn't mean that we'll not cover the business which is going to a all-time high. Should not be an avoid list. And now coming to your main question, which is how will I look at investing in Wonderla? I need not wait for the stock price to come down. If something good happen in the business, or if I think this company can trade at something like say 25 times PE also, I'll probably buy even at 20% higher than this price. You should not only anchor yourself to price. That is in my books. I think that is a very narrow way of looking into a business. If you are having a long-term view, if you missed a business because it was available at say 100 rupees and now it is at 300, you are thinking when it will come down to 250, you will buy. I think in case of good businesses, more often than not, you will end up missing on businesses when you are having a price filter like that. You should always be very flexible and have a very range bound approach. It should not be a particular number ki ye price pe aate hi lena hai, jab tak nahi aayega tab tak nahi lena hai. You should be willing to buy even at higher price if provided valuation in the long term gives you that. Say for example, right now my understanding is only 2 million footfall mein le raha hu. और अगर 2 million इनका next 2 साल 3 साल के अंदर में हो गया, I don't know whether it will happen or not, but just for some reason it may happen. Or if I get an indication कि 1.5 million हो जा रहा next year में, then I'll have to readjust my working, which I have done. Right? I cannot just wait on the price. I hope I could answer your question.
Yes.
Vinodji, and another thing is, Harshal from our team will get in touch with you separately, and he'll let you go through all the webinars which we have done, so you will get a very good understanding. Our objective always is to find good businesses and do a detailed research on that. We will always give our disclosure whether we are invested in it or not. But just because we are not invested in it or we don't find it attractive today should not be the reason we will not present on it. It should be in a watch list, in our watch list at least. That is why we have presented on it. Right?
Yes, got it. Thank you. That's
Thank
all
you,
from
Vinodji.
my side.
Thank you. Anyone else? I'll just look at the chat box. I have not yet looked at the chat. Anybody else wants to ask any question? I think Manoj Duaji is there, and I know he has been tracking the business for long. Manojji, if you can just say your perspective for 5 to 10 minutes, that would be really good for us. I've just unmuted you. You can just, I've just given you the request to unmute. Can you hear me? Yes. Yes, Manojji. Hello. I think there is some issue at your end. We can't hear you. Achha, your mic is not working. No problem. We'll wait till it start working. No problem. Yeah, Vamsi, I've Vamsi, I've unmuted you. You can ask your question. Yeah, Manoj, we'll wait for you to get on phone.
Hi, sir.
Yeah, hi. Hi, Vamsi.
Yeah,
Please
this is
go
the
ahead.
first time I logged into Smart Sync services. So day before yesterday on Guru Purnima, I have taken this. So like I'm trying to see your website. So where should I start? Like, do I need to look at the 27 Mission Smile webinars, or I need to look at the 100 small cap list? Like, what is the starting point? Like,
So, we have recently uploaded a video on our YouTube channel, Smart Sync Services, which gives a very clear understanding of Mission Smile 2.0, how to look at the platform and how to access all the videos. So you can go through that video. It's a 10-15 minutes video only, and it will give you a very good understanding how to look at them. And in terms of understanding whether you should start with small cap or you should start with Mission Smile videos, it is up to you. I would say start with something which is more important. I would say, in terms of try and attend a few or look at few of the recordings of our investing Carva and guest session, because these are people who have had very good experience in the industry for last 20 years. And with that, you just browse through the list of the companies which we have covered. There must be some companies which you are also interested in, and pick up those companies, right? I think that would be helpful for you.
okay, so
And in any other case, we'll help you out in further understanding the platform.
so introduction video is in YouTube, is it?
Yeah, Harshal has already shared that on the chat box. You can check the link also after the webinar.
Yeah.
Okay.
And one more question on Wonderla, like
Sure.
this land in Bangalore, is it near the Bangalore Mysore nice corridor?
Yes.
How near is it to that corridor?
Yeah, it is in the Mysore road, Bangalore Mysore corridor only, nice road only.
Okay, okay. That means the land prices will be above 5 crores or 6 crores in the per acre, isn't it?
Yes.
Okay, okay. I was just checking on the land prices and
Yes.
just doing what could be the land prices there.
So one of my investor friend was telling me yesterday that there are different ways to look at risk. So if you go to the Bangalore park, you have to take a ride from the highway, and that lane is very, very, very small lane, narrow lane. Okay. So even that looks like a risk. Something can happen there, so that may upset people going to the park. So there are different ways to look at businesses and different ways of looking at risk, which can hit the business also. Right.
Yeah,
so,
I think it's in the second or third plot of from the main road, isn't it?
yes, yes, yes.
Okay, okay. So it's a narrow road, is it?
Yes, yes. It's a very narrow road.
Okay, okay. The one in Hyderabad, it's very near to the outer ring road. So I don't think that's an issue there.
Right, right, right.
So I went to Wonderla, Hyderabad, and so accessibility and all, it's very good. And it's also like real estate is improving in that area.
Yes. Thank you, Vamsi. So I'll just check if Manojji has. Okay, maybe he has left. No problem. So any other question from anyone? Okay. So I'll just check the chat box once. Okay. Harsh asked if they are planning to open a park in Gujarat, Rajkot should be looked at. They are going to get maximum capacity utilized from the beginning. Sure. Sure, Harsh, I'll pass on this comment to the IR, and I'm sure the management would already be knowing about this. So second question is, so I think Manojji asked this question. I think minimum 10 parks would be there in the next 7 to 10 years. And as F&B portion to sales will increase and added new footfall directly goes to PAT, and operating leverage will cause more EBITDA margin than 40. So this is again a very good perspective from Manojji, that I have taken a very simplistic model where I said that I am assuming ki margin yahi rehta hai, and they will only do 7 parks. But he says over here that probably 7 to 10 parks. He's saying that 10 parks is also possible. See, so if you look at it in that perspective, even at this valuation, it becomes very attractive. But remember, this is a 10-year projection and thinking which is being done. There will be lots and ups and downs in the market, in the business. So whether you want to hurry up and buy now, or you want to have a deeper understanding of the business. I will again reiterate, don't just focus only on the price. There are many businesses, and you can go back and check in the history. Good businesses can continue to hit new all-time high every year. And if you are stuck into the old pricing ki wo 200 ke niche aayega tabhi lena hai ya 250 ke niche aayega tabhi lena, that is not a good way. Of course, I will always say, look at your valuation perspective and your thinking. But this is a very interesting insight by Manoj ji over here. Yeah, Vimal ji asks, I think they manufacture and engineer their own rides. Yes, you're right. I've already mentioned about that. So most of their rides are their own, but they also have imported rides. ऐसा नहीं कि सारा का सारा वो खुद बनाते हैं. But in the parts which are coming now, there will be more in-house made rides and lesser of imported rides, which will further improve their margins. Yeah, again, the ride which I was talking about. So Transformers, this is the 3D ride. Again, Manoj ji has mentioned over here. You can check this out. It's a very important and intriguing concept to look after how much of cost does a ride have. So over here, it costs $100 million US. Okay. So that is how expensive these rides are. But can single park like Nico Park, can they be takeover candidates? So takeover may, if you go by the management's interviews and what they have said over the con call, they are very clear of their philosophy and how they run their parks. So wo us tarah se park run hoga, tabhi karna hai. So they were having that offer of buying out even Imagica, but they didn't, because उन्होंने वहां जाके देखा, स्टडी किया, देखा कि the way those parks are run, it is far more asset incentive or capital intensive compared to the parks at Wonderla. So I would say that actually management is doing the right thing. They are doing it their own way and doing it organically. When there is a huge, and when they have the cash flows to, and the new business model where they are going for less and less capex, or if you can call it asset light, why do they need to go for acquiring park where they don't know what kind of ride conditions are, baki kuch aur issue ho chahe nahi ho wahan locality mein and all? Why do you need to go and venture into that, right? Abhijit asks, have we looked at the ride upgradation maintenance capex that would be required? So as I told you, again, I said that in the during the presentation, ride upgradation and maintenance are there, but those are pretty nominal compared to the incremental PAT which matured parks produce. Matured park produces somewhere close to 100% ROE. That is the kind of business they are in. Okay. Is this generally a major cost based on your reading? No. So in something like an Imagica, this cost is much higher. But in case of Wonderla, this is a much lower cost, I would say, the maintenance capex and all. Abhijit, I am a new member. Just want to check if you have shared the list of assets. So I think Abhijit will get back. Someone from our team will get back to you, or if you can just drop me a message, DM, I'll get back to you on that. Okay. Aditya asked a good question. Which books are you recommending to read from the owner? I have read all three and I am probably biased. So if you want to know about his journey, about his how he was as a person, and I am a fan of what he has done in his life, something, even though if we cannot emulate, we can learn a lot from people like Mr. K. Chitrapalli. So I would suggest read the book, The Gift. But in terms of more about business management and life principles. His other book, I think he wrote 2 volumes, I think Life and Principle or something like that. There were 2 volumes of that book. Even that book is good. Okay, I think, okay, I didn't see that Vimalji has already mentioned about that. Practical Wisdom, yes, Practical Wisdom 1 and Practical Wisdom 2 are the 2 books. I feel Wonderla should make a capex in ICE theme entertainment thing. It's a huge attraction. Okay, I have little understanding of that, Subha. In fact, it's high time I should go and check out the Wonderla Park in Bangalore. Maybe I'll have a better understanding. So Dilip, we have mentioned the name of the book. The one book which I mentioned was The Gift, which is about the autobiography of Mr. Chitrapalli. And the other is Practical Wisdom. That Practical Wisdom book has 2 volumes, 1 and 2. I think I've covered all the question. Anyone has any more question? If you have any feedback, our team has worked really hard, Shivam and Harshal, on this presentation. Did you like the new presentation? If you have any feedback to further improve, we are happy to listen to all of you. And any other question, we still have time. If anyone has any question to ask, or if you want to ask question later on, we are always available. You can ask on the WhatsApp group. You can email to us. If you're not a member, you can even email to us. We'll respond to all your queries. So with this, we come to the end of the presentation. And thank you so much, everyone. I'll just check once if Manojji is back there, and if his, I think Manojji is not there, right? Just check. Just give me a minute. Yeah, Manojji, if you can try once more.
Yes, Ankit.
Oh, great, great. Thank you so much. Yeah. Maybe you can switch on the camera if you are fine with it, so that we can.
No, yeah, I'm not in a Sunday mood, yeah.
Okay, okay, no problem. Even your voice is good enough. I would highly recommend everyone to just keep patiently listen to what Manojji says. He has been invested in Wonderla pre-COVID. He bought more during the COVID times, more during FY21 and 22. And I would just keep the floor open to you as long as you can speak, Manoj sir. Please go ahead.
So this is basically a consumption theme, but as of now, consumption theme also depends on how much is the cost. Like I can see many families who are going Wonderla Park, who are living in Bangalore vicinity or Hyderabad, maybe once in 2 years. As the per capita goes up, they may be visiting once a year or twice a year also. If their cousins are coming from somewhere from Calcutta, okay, let's go together. So definitely it's a play on the consumption income. And in India, as it is being told that everybody says you can come everything in consumption income. So that demand is going to be there. There is no doubt about it. Most of the areas where we play consumption income, we are not able to judge the supply. So because it's a high entry barrier business, Wonderla will be able to take the maximum benefit of this consumption income, because supply of the good parks are not there. Secondly, we don't know where the J curve will come in this consumption income. Suddenly now, earlier people don't used to eat inside the park and try to save the money. And now we don't, we don't now try to maximize the experience. If this thing, a kind of thing is going on and getting in the momentum, F&B can be a big part of the ARPU, and which is a very, very high gross margin line of revenue without any capex. So I think it's a good price today also, but for that we have to be very confident about the consumption pattern, which we see that per capita goes up. And that portion, that supply will not come, that I'm more confident about. And it's a good management. Now what is happening is most of the states wants their states to have a good parks, good tourism. Many states are focusing on that. So this could be a game changer for Wonderla if they're able to provide the land on lease or on very favorable term. So they have a template now that this state has given us on this term. So this template can be presented to the other states also. Now Arun is very, very aggressive these days. He has changed the so many shows are happening in night. He's introducing new events in the park so that people come again and again. That is the key. Somebody visiting park once in 2 years should, if they start coming twice in 1 year, and their consumption pattern is much different than the past, then it's a very good cash flow business. Thank you, Ankit.
Thank you so much, Manojji, for spending your precious time on a Sunday and sharing some insights. And I would highly recommend all of the people who are attending this session to at least follow Manojji on Twitter. He doesn't write about businesses on Twitter, but I would like to take this opportunity to thank him for helping me out with understanding a lot of businesses and spending a lot of time explaining to me how different businesses work. We did a very good session with Manojji on real estate that is there on our YouTube channel also. I would highly recommend all the new members who would have probably not looked at that video. Don't worry about that Twitter handle. We'll share it on the WhatsApp group. Or you can just type Manoj Dua, you will be able to get that. What I want to say is that it is not about whether you should buy real estate now or not. What I really learned and liked about Manojji is that if you are thinking to become a long-term investor, and I would again share one important thing which I learned recently from him, that summation of short-term is not long-term investing. Most of us are summation of short-term investing, where we look at 1 year, we look at 2 years. Even in case of, I don't have, again, no shame in admitting, in many of the businesses which are there in our SSS portfolio or in my personal portfolio, it is all a case of summation of short term. Real long-term investing is where you can actually think. See, in case of our presentation or our projection, how we were so conservative, we said that देखिए 3 से 5 है, 5 का 7 हो जाएगा और 1 million से 2 million जाएगा. And the kind of conviction Manojji comes with, he's saying that easily 10 parks will be there. Maybe footfall will also be more, because as he said that अभी तो एक बार 2 बार से ज़्यादा कोई जाता नहीं है. As the per capita income will increase, there will be more footfall. People will be going more often, right? So these are things which doesn't come overnight. You have to spend a lot of time going deep into businesses, talking to people who have already gone deep into some businesses, and then